You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little program we like to call in these parts the option block. A little bit of options wit, some wisdom, some analysis, a whole bunch of unusual activity, and stir into the pot your questions and comments and insights and hilarity. And you get, of course, the tasty stew. At least we hope it's tasty. That is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. An exciting day. A lot of fun stuff popping off today. Of course, you guys know where to find all of our good, fun stuff, whether it's this program and archives here, or, of course, all of the archives and articles and links and news and analysis and education we post on the site every day. It's theoptionsinsider.com. You can get it all there. It's your one-stop shop, if you will, for all things options. And then, of course, you can always find it if you just want to mainline the radio, iTunes, TuneIn, Stitcher, iHeartRadio, all those fun destinations. You name the place, we're there, or we should be there. If we're not, let us know. We'll make sure it's up there. And, of course, if that's all too much for you, just grab our app, available for iOS, Android, and the beloved Fire OS. And, of course, we also love to see you guys join us live if you can make it every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, Mixlr. Join us there, and you could question, comments, give umbrage back to the Rock Lobster, all sorts of fun stuff. So join us there. We'd love to see you guys every Monday and Thursday. Speaking of the Rock Lobsters, welcome in the rest of my my crew here. Let's go in order. I'm not sure what the proximity is today. So let's go in reverse proximity, I believe. So let's start with a little hamlet that's known for some pickles and some water gardens, and also a whole mess of lies. It is indeed St. Charles, Illinois, where we are joined by the one, the only Uncle Mike Tosaw from RCM Wealth Advisors, a.k.a. RCM Alts. Uncle Mike, welcome back to the program, sir.
Always happy to be here. And the only reason we're known for lies is because the host of this show tells them about my beloved town.
Yes, Umbridge. There we go. So I drive people there, even though some of it may be negative. You know, what's the old saying? All PR is good PR, right? Even if you're slammed and known as a hotbed of lies and malfeasance. Well, at least you're known for something, right? That's always a good thing. And then going a little bit farther abroad, we are joined by the Rock Lobster himself. I think he's dried his tears now, listeners, as to his ever-shrinking ice rink. At least I hope he has. I don't know. We'll find out. Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program to you, sir. And how goes your ice rink woes?
It's the ice rink woes. I'm over. It's now. I mean, spring is what is it? 15 days away or something like that. So as usual in Maine, the winter stops and Maine starts to sprout. So the ice rink is yet but a puddle of tears. That's all it is.
Puddle of tears. Yes, indeed. And then joining us on our grand foray through the world of options, we're expanding our all-star panel and welcoming on a fourth panelist today. He's a newcomer to the show and indeed to the network. He is Ophir Gottlieb. He is the CEO over there at Capital Market Laboratories. Ophir, welcome to the Option Block program.
Thank you. Thanks for having me. An all-star, I'm honored.
Yes, it's an all-star lineup we have here, even though some may dispute that, Rock Lobster, but we'll get to that in a little bit. But since this is your first time joining us on the old network and indeed on the program, why don't you go ahead and give our listeners a little bit of an overview of your background in the options world and what the heck it is you guys do over there at Capital Market Laboratories.
Yeah, all right. So I was an option market maker on NYC ARCA, and I did SIBO remotely. And I worked as a head of algorithmic trading for Livol. A lot of you might know Livol, the option analytics world. I then moved on to run institutional quantitative research for a firm called GMI. My educational background stems from my graduate work at Stanford in financial mathematics, focused in measure theory, stochastic differential equations, machine learning, things like that. CML, or Capital Market Laboratories, I started the company, I think 2.5 years ago with James Kaplan, who, amongst other things, is one of the founding directors of MarketWatch. And I kind of consider him one of the grandfathers of modern portfolio theory, certainly in the fixed income world. And so we're an institutional research firm. We're a member of Thomson First Call. So our research sits next to, Goldie and Morgan and all the bulge bracket banks. But we have a pretty simple mission, which is just break the information asymmetry that's benefited the top 0.1% at the expense of everyone else. So, while people are paying $2,000 a month for their Bloombergs, we provide the exact same institutional research for 98% less. So that's what we do at CML, and we focus on options and we focus on stock research, and that's what we do.
And one of the things you guys are offering, which really kind of caught my eye, one of the reasons we wanted to have you on here, is you're also offering a back test functionality, which, if anyone's familiar with options out there, it is a challenging thing to do in the options landscape. It's not like a stock where you can just go look back and look at a chart, over the last 2 or 3 years. Options obviously have expiration dates, they have implied volatilities, they have all these things that really complicate the process of trying to make an effective back test. I've seen a lot of people approach me over the years, trying to take a stab at that, and with middling degrees of success. So I'm curious, how did you guys tackle that nut, and how are you able to offer a back test over there at Capital Market Labs?
So, my CTO was also the first employee at Livol. So we have the kind of options background and the technology background within the options world. Approaching an options backtester, you got to just approach it like a trader would, right? So my background's on the floor. So, what do you look at on the floor? It's not necessarily what a technician would look at in the stock market, a 10-day moving average or 50-day moving average. It's more like, what do you do when you own a weekly call that you bought for $3 and now it's $1? Do you just close it, and just say, okay, I lost 2/3, I don't want to lose 100%, or do you let it ride and hope that Friday's a good day for you? It depends on the stock. Same thing with a short put, right? Should you sell a put spread or sell a put? What if you sell a put and put a limit, right? So that's like a conditional put spread. So these are the things that the backtester allows you to do. It should seem pretty easy to use. Let's just tap a few buttons, get a result, but it should also kind of fulfill the needs of anyone who's traded options pretty seriously. Just it gives you the answer the way you would expect to get the answer, and it has the features you would expect to have. So, custom commissions, no problem. Custom deltas, no problem. Custom strategies, no problem. A lot of results quickly. How does it look relative to stock? Stop losses, things like that. And if you approach it in that realm, then I think you can sidestep a lot of the problems that maybe other attempts at a back tester have tried to, have sort of fallen to. So.
I see. So you get around that by having a customization, or it sounds like a lot of customization options, which when you think about it, actually makes sense. Allow the end user to kind of solve that problem for you by inputting, hey, if it gets below this price level, I'm going to close it. And, other things that otherwise you kind of have to assume when you're back testing. You have to assume maybe that they held every option to expiration, or all these other things that previous attempts at doing this have done with, like I said, middling success. So it sounds like you guys, by allowing a little bit of that customization feature, allowing the user to input a little bit of that, have done a little bit of an end run around that, which, when you think about it, makes a heck of a lot of sense.
Yeah, and I think every option trader out there is going to tell you that they have a slightly different approach to something. Even if we just get 100 option traders in the room and we talk about how you sell puts. Just, something very simple, like, do you trade during earnings or do you skip earnings? Do you put a stop on or do you not? Do you sell a 30 delta or a 50 delta or a 70 delta or a 10 delta? Do you do it weekly or every 2 weeks or every quarter or every month or every 2 months, or do you use leaps? These are things that we would all have different answers for, and we'd all probably have really good answers for why we do it. But I don't think a backtester can be proper if it doesn't allow you to try all those things. And, maybe you're challenging your own convictions. Maybe selling a put every week is actually too expensive, or maybe it's brilliant and you should be doing it, but at least you can test it and you should at least have the ability to do that.
I do like some of the functionality you guys have built in, like being able to avoid earnings and some other things. So you could, or maybe include earnings if you want in your back test. Obviously, those are big factors for a lot of people in there. So a lot of cool functionality. I encourage listeners check it out over there. Capital Market Laboratories. They're at CMLViz on Twitter if they haven't done so. Meanwhile, we're going to keep on rolling right on into our first segment. It's time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is the portion of the show we break down what was rocking, what was rolling, what was catching our eye in today's activity. Mostly red on the street today. Most of the major indices closing off about 0.5% or so, a little bit more, a little bit less. S&P a little bit more, category off about 0.6% or so. Nearly 14 handles here on the day. The rest of the major indices in similar fashion, a little bit less. And good old VIX cash getting back to that positive correlation we were talking about on volatility views last week. Also in the downside, down to about 0.75 point or so, shy of the 12 handle yet again. So it keeps flirting with that north of the 12 handle, and it keeps retreating back. Hopefully a little more retreat is in the near future, so my volatility views prediction will come in line for tomorrow. Still got about a day or so to make that happen. And it's mostly red, like I said, on the street today, with the exception of the one big name, Snap. I think we'll get to that in a little bit. A lot to dissect there. But before we do that, let's kick things off with, let's start in the realm of the rock lobster. What was lighting it up today? What was catching your eye today? Mr. G over there in your pitch chat.
Besides the sleepy boredom, we had the big rally yesterday. What was that? I'm kind of a normal guy rally. I don't know, from the speech. I guess it was from the speech. It's going to be anything but the speech. But we rallied. We rallied 1.4%. VIX dropped a little bit, and actually I think VIX almost dropped today more than it did yesterday with the index down. Normally when you have those crazy rallies when the VIX is so low, they kind of drag volatility up. So you can't go down too far when you're rallying 1.4%. Like you can't go to 4 VIX or whatever. It's not gonna, doesn't happen. So VIX kind of got stuck as far as, vol got stuck. It's hard for it to go down too far after a big rally like that. Vol gets dragged up, and then, the SPX was down today and VIX cash was down today. So some of that, I guess, kind of some of that vol drag we had yesterday just sort of leaked out today. But it's not like there was a big bid for anything. For options, at least as far as I could see. Not much name volatility moved at all. So I think, like you would sometimes, a famous person once said, it's kind of a meh. Maybe this Russian stuff brings some volatility. Maybe the North Koreans bring some volatility. I don't, you never know where it's going to come from. It certainly could happen. But, I mean, at least for today, the vol futures were up, I think, flat for the day. With SPX down. So those actually got to a more normal, what I would say, like a kind of a statistically normal contango, about where they should be with this far to expiration. Just not a lot of tremendous things happening in the market, except all the stuff that was up yesterday is down a little today. I mean, it was kind of unremarkable. And the reaction from volatility was, it's something I talked about this morning on my vol report. Just don't expect VIX to really jump, even if we drift down a little bit, because, of the vol effect we had yesterday. So it's just one of those. It's kind of a ho-hum day, and we have a labor. We have an unemployment report tomorrow. That could stir things up a little bit, but. I mean, when the futures are flat, the VIX futures are flat, and the SPX is down 0.6%, that's not a whole lot of the market, at least for right now, is not pricing a whole lot of worry. Let's just put it that way. So that's, those are the trades that we looked at. We're buying, time spreads at like 7.5% vol. So it's just not very expensive. It's just not very expensive volatility. So you would think the players would be a little bit more nervous, but they just don't seem to be right now. I wish I had more exciting things to report. I think Ophir's tweets are more exciting when he, talks about Twitter and Apple all the time. They're kind of fun. Then when you're bored and looking at stuff, you can read those. Then you had today. I was doing that, like, oh, is Twitter ever going to do anything? Like, no, but one day it might.
You got to tweet what the people want to hear about, right? You can't just tweet about some crazy pink sheets. You got to do the Apples and the Twitters and the Facebooks and these days Snaps. We'll get to that. I said in a little bit. I know a lot of guys are already chiming in. What about Snap? We'll get there. Uncle Mike, what was cooking in your neck of the woods today, sir?
Never before in the history of the entire stock market has there ever been a better time to sell than yesterday.
Oh, you clever fellow. Changing it up just a little bit for us. I like it.
I had to do something different. I mean, I didn't want to say anything. I didn't want to say my trademark saying until I wanted to see 21,000 and 2,400. We saw it yesterday, but couldn't quite. Unfortunately, it wasn't on a day with which we were recording. So, yeah, I mean, yesterday was a huge rally. I think yesterday was more newsworthy than today, obviously, but one thing that I did notice is that we could not cross that 2,400 mark and stay above the 2,400 mark on the SPX. So I actually took some money off the table yesterday. It was funny. I put in on Tuesday afternoon, I added some deltas overall to our SPY positions. And just because I wanted to have a little bit more exposure for the next couple months, the previous spread that I had was in the money. And so I'm like, well, I should probably add something right now. So I did. And obviously I was very happy I did. I was planning on it being more of a 2 to 4 week trade, but it became a 1 day trade. So no complaints by any means. I took it off yesterday. So with today, I think that the concerning part, like I said, if you are going to be a skeptic, is the 2,400 mark with the SPX. We were not able to get through that. It's kind of a psychological barrier because it's a round number. The Dow 21,000, we're okay, and we were able to get through that one relatively easy yesterday. But as we go through this, the one thing today that I found interesting was the metals. They got the royal tar beat out of them today. Stocks were down. Gold's down a little bit over 1%, but my beloved silver is down 3.5%. Now, I'm a long-term silver bull. Not changing any positions with which I've had on it, and still have the position that I described on the strategy block a few weeks ago. But if you are a silver bull, today now might not be a bad time to get in, as this could be deemed as a buying opportunity if that's what you are into and what you are looking to do. The other thing that came down a lot today, Caterpillar dragged the Dow down quite a bit. There was some news about that they're getting investigated in some way, shape, or form. And aside from that, yes, it was the first triple-digit loss of the Dow in over a month, but it's a down day, folks. In bull markets, you have a down day from time to time, and the fact that we had a 33-point up day yesterday in the S&P, and today we're down less than half of that. Still reason to be excited in general from where I stand.
All right, and last but not least, Ophir, you guys are working out there, visualizing, doing research, back testing, all that fun stuff. What was catching your eye in today's market activity, sir?
So 2 things. I think yesterday was the first time in, some very long period of time that we had a 1% move in SPX, and I was really curious to see what would happen today. I actually think this was one of the healthiest responses possible. If we were up another 1% today, I would have actually started to get a little worried. Also kind of a little bit mesmerized by the VIX. I think we all are. It remains low, cash or futures, and there's a calm in the market. I don't know if it's a risk malaise and people are going to, feel foolish, or if this is proper. I'm also looking at the utilities. I look at them through the XLU ETF, and it's been ripping for about 4 months, and it's it was up today. It's a real safe haven I found some, really interesting put spreads and puts to sell in there, even with this just devastatingly low vol. It just keeps printing money. But in general, I think a healthy pullback after yesterday. I am surprised to see VIX not rising just a little bit, but I'm interested to see if we are now in a market where realized volatility is back, where we could have 0.5%, 1% moves, which is kind of the beginning of a possible correction, or if this is just, healthy. Hey, we went up a lot yesterday. We came down a third of it, and now I'll move on with more of a bull. So that's pretty much what I was watching.
All right, let's get to it. Everyone's asking. They're waiting patiently. They want to know snap. So let's get to it, even though not optionable. But still, obviously, it was supposed to list today at 17, ended up opening right around 24. And get traded as high as a little bit, tick over 26, about 26.05, I think, was the upper bound there. So up nearly 50% or so from where they were planning on listing this thing. We'll get into the whole IPO process. Maybe we talked about that before and our distaste therein and what this valuation represents at the end of the day. But all that aside, our listeners, I say this all the time, our listeners are geniuses. Our audience is just full of geniuses, because we asked, you guys called this, you're very smart fellows, and ladies, of course. We went out to you guys yesterday, so well before all this Snap brouhaha happened, and we said to you guys, hey, let's just assume Snap opens around its price of 17. How would you guys price that 1 week straddle? So 1 week to go from the next Friday, so a week and a day effectively. And so we gave you 4 choices, as we always do, between $1 and $2. Kind of low, but you never know. Some people might think not a heck of a lot going to happen there. Between $2 and $3, between $3 and $4, and over $4. I'm guessing you guys can guess which way our audience was leaning. But this thing took off the second we posted it, and then just everyone was of one mind. It seemed like it ended up. It's not done yet. It's still running, but it's kind of a moot point now. It ended up $7.50. So anyone who chimes in now is going to be just skewing the numbers. But 55% saying over $4, which is not an insignificant move for a week. You're talking about a quarter, about 23% or so. So people were expecting some rock'em sock'em robots today out here in Snap. And they got it, like I said, closing up $7.50 at the end of the day. So almost 2x the extreme value that we were allowing you guys to pick. So you guys were right on the money. If there were options this week, you guys would have crushed it. Speaking of which, a lot of questions like this one from Lamont Maurice. He wants to know. I'll forward this one now. We don't have to wait for the question block or the mail block to get to this one. He wants to know, like a lot of you, when do the options trade in Snap? That is a good question. We've discussed this many times in the past with big time IPOs. There's some float issues that need to get sorted out first. And then usually it has to get listed, obviously, on an options exchange. Usually somewhere in a couple of weeks is probably when you could reasonably expect. I haven't seen any actual announcements. Maybe you guys have at Rock Lobster or someone of some actual listing dates. But usually, if they can get the float sorted out and they meet the other listing requirements, it could be as soon as in a week or two. If not, it could be longer if there are some issues out there with the float. So, have you seen any concrete dates out there, Mr. Rock Lobster?
I have not yet. I'm actually looking for it. Mostly, I know I'm weird like this, but I just don't care about it till the options list. I know. Doesn't that sound kind of,
Oh, you're no fun. You're old school. I understand. I don't touch stock either, but still, you got to play. Everyone and their mother is talking Snap. Speaking of which, we gave them another hypothetical because people weren't enough with that one poll. They wanted more. So we have to feed their Snap hunger. We asked them just about a few minutes ago, right before this, actually during the show. So just a few minutes ago, we asked you guys, hey, today Snap closed 24.5. Let's just say hypothetically options were available tomorrow. Would you rather buy a 1 month 24 put, buy a 1 month 25 call, so again expiring a month from now, so upside or downside $0.50, or would you rather stay the heck away, or would you rather sell some premium? So let's go to Ophir, our guest, give him pride of place. Ophir, if you have a vote in that, which one you'd like, let us know, and then what do you think is winning our poll?
Unfortunately, I'm addicted to selling premium, so I think you know my answer to that one.
Uh-oh, another degenerate premium seller. I like it. Welcome to the show, sir.
It's just to my own detriment. You just say it and I get excited. I think the poll, let's say the poll, I'm going to say the poll said people want to buy the 25 calls. I would be a seller of puts. I think there's enough kind of in the tank here. I don't think they're going to let this thing go down for a while. I think the banks, they've got a little ammo. But I think your poll is going to say, unless the poll is going to say people are going to bet on a little bit of hysteria, and I'm going to say they buy the 25 calls.
Uncle Mike, your vote, and what do you think is winning?
I think the 25 calls are winning, and my vote is I'd buy the 24 puts.
Interesting. Mr. Rock Lobster, take us home, sir. What is your vote, and what do you think is winning?
My vote would be buying the puts, but I think winning they're just going to buy calls because it's the Snap IPO. That's what they're going to do. But I'd buy puts in stock and then wait.
It's interesting. I might have to get puts in stock. Yeah, I could see the puts. I'd certainly go puts before calls, but I might have to lean like Mr. Ophir. Maybe go a little bit dark side on this one because they're just pricing in so much juice here, and that is a lot of juice they're pricing in here. 23% on the weekly option alone. Granted, this is the IPO week. Things are a little bit fluffy, and we know front week mostly gamma, not really vol, but still intriguing nonetheless. Right now, winning our poll, 43%. With the 1 month 24 put. We all know, though, IPO puts, those teams tend to get a little pricey really quickly because you can't really short a lot of these things early on. So those might be a little pricey to buy. But that said, we didn't give you any prices. We just gave you a theoretical. People are piling into this one already. We'll see. Maybe this will evolve as the show keeps rolling. Speaking of the show keeping rolling, we don't even have time for all the volume numbers. We'll get to that next week. Let's keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That music means it's time for the part of the show where we venture bravely, wildly, some may say recklessly, into the world of all things unusual in the options landscape. Going to kick things off, actually in a name, we haven't talked about this one in a long time, getting back, and we talk about a lot of tech names and, of course, a lot of mining and energy-related names these days, and a few retail slip in there. We don't talk a lot of over-the-counter shakes companies, but SHAK making it onto the list today. Ticker symbol, of course, SHAK, S-H-A-K. Not of Shaq fame, but S-H-A-K. A Q would be nice. That'd be funny. Closing today, 35.17, off about $1 or a little over about 2.5%. This is the name that doesn't really light it up on a given day, about 1,800 contracts a day. Today, doing 10,542. Pretty aggressive, about 1-to-1 calls over puts, which is kind of interesting because what caught our eye was some pretty near-term put paper. In particular, it was the weekly, so expiring tomorrow on the 3rd, March 35 puts, which are pretty much right at the money right now, going up, starting off the day. Again, it was a quiet day, so sometimes you have to find a little bit more of the more interesting nuggets in some of the smaller trades. And today we kicked it off with about 400 of these March 35 puts going up. Looks like paper buying for 13 and 14 cents. As the day went on, a little over 1,000, about 1,100, nearly 1,200 going up here total on the day. This is on open interest of 700 contracts, so clearly at least a good chunk of this is opening. It is kind of interesting whether some of these could be closing, but clearly there was some opening paper mixing in as well. There was a little bit of a tussle there. Looks like around the 13 to 15 cents. They're trading 30 cents. So at least they were for a while there. So our friend was looking pretty good, at least earlier here in the day. This is the name looking back on the past year here in good old SHAK. This thing has kind of had a bit of an interesting range. Drifted down as low as about little shy of 31 and as high earlier in the year at around 43.5 or so. So it's had an interesting range here. And our friend here, if he was speccing on these, if he did come in, just scoop them early in the morning, then maybe close them out. He did all right. He got out of some of these. If not, if this is just closing, then perhaps not. Mr. Rock Lobster, let's kick things off here. What do you think? You think this is buying? You think this is closing? This one's a little bit kind of a coin flip here.
You know, it was hard because it ended up being a bunch of paper buying. So I looked at that. I was looking at the pricing. I mean, somebody had to be opening something there. So I think it smelled some of it. Yeah, I think that the initial paper looked kind of closing just because it was sort of small change. that would make sense on something you'd want to close. It's only 13 or 14 cents. They probably made their money and they're done. And then everybody kind of there was some piling in on that. And funny enough, I mean, Shake Shack is right at 35. It's 35.17, and those puts are piffly poo. They have not really moved at all. So the vol's in. I think the earnings came out today because there's such a huge drop in vol. So, and I think somebody took some money and they actually tried to, and I think they actually tried to jack it down a little bit, and it just never happened. So, I think the buyers of those puts, whoever's extra buying, are going to be sad generally.
Yeah, probably. There definitely is some extra. Whatever was going on there today, I think that's a good way to describe. There was some extra. Ophir, I know you watch a lot of things over there. Maybe you didn't have a chance over there at CML today to watch SHAK, but do these puts come across your radar today? And if so, you have any thoughts on them?
Yeah, I mean, obviously there's a vol crush because of earnings, but this was like a particularly big one. And it was not the greatest report, or at least the market didn't like it very much. I actually didn't hear it, but just looking at the price action doesn't look very good. It's not totally clear to me what happened, but it wouldn't have been the worst speculative bet if they were getting them for that 13 or 14 cents in the day. Let's see, when did those cross the tape? Yeah, I mean, that's not the worst bet of all time after a vol crush with the stock going down. Sort of an epic vol crush for them to maybe just, I don't know, take a bet. It wasn't a big bet. It's not these aren't big trades. These are 200 lots on 13-cent options. I actually wouldn't have thought it was the worst bet intraday to see what would happen. Maybe SHAK just falls apart and goes to $34, and you make 3x your money on a little gamble. But that's it. I did notice it. That's probably the best I have to say about it. I don't think it was particularly shocking. I do note that the vol crush was kind of epic for this company, even with an earnings drop.
You got more Mr. Rock Lobster, or should we roll on?
Oh, no, I just said we have another odd box player, so I was very excited.
Odd Mr. Rock Lobster. Throwing me off my game here. All right, let's keep on rolling. Up next on the old odd block, got Siri. No, not the much-aligned digital assistant from Apple. Can't trade options on her, unfortunately. That would be kind of cool. I think a lot of puts would be trading on that if that were the case. No, this is, of course, Sirius XM Holdings, ticker symbol SIRI, SIRI. Closing today, pretty much unched on the day, $5.13. It's the name that does about 6,200 contracts a day, doing a whopping 54,000 today, nearly 2-to-1 puts over calls. That should give you some inkling, but if it did, you'd be in the wrong direction because we were actually looking on the call side. So there you go. Put that in your pipe and smoke it. A little curveball there today. And it was indeed not these weeklies or in fact dailies like we were just talking about, a little bit farther out, not too far, just March. In particular was the March 5s that were lighting up to the tune of, starting the day, about 12,885. As the day went on, about a little more than 1,000 more piled into the tune of just under 14,000 total on the day here on these March 5s. That initial mega block of nearly 13,000 went up on the Philly for 18 cents. Looks like, given the fact there is some size open interest here, looks like someone dumping these out for, again, 18 cents, which, if you can do your basic math, listeners, this thing closed at 5.13. That's a nickel over, effectively parity, effectively over their value there. So this has all the hallmarks of someone kind of giving up the ghost, closing out on some calls that maybe didn't work out that robustly. Either that, if they're not doing that, then this is perhaps, we've joked before on this segment about how the hunt for yield is getting a little thin and people are really going far and wide and giving up a lot of risk for many months for, what did we see on the recent show, like a nickel. So if our friend's doing this for not quite a nickel over parity, 18 cents total, it is perhaps, this might go into our new annals of some of the people really squeezing to get some yield out here. And looking back at the year that was, in Sirius XM. Actually hasn't been a bad year. You know, you hear a lot of dire things about satellite radio these days and who needs them with things like this, podcasts out there. But that said, SIRI has been on an upward trend for most of the year. It was trading in the mid threes to start the year and getting up as high as looks like about 520 or so. So kind of right at the upper end of its 52-week range. And our friend here, Mr. Rock Lobster, decided to get the heck out of Dodge, and looks like anyway, and take these calls and abscond while there was still a nickel left to be had. Is that your take as well?
I did. This is one of those things where there was selling in what we'll just call in the money calls. I mean, you still have a couple weeks to go, and you're letting go a call 5 cents over parity. That's not my favorite type of trade. But we have seen call writers in here before, and the stock doesn't really move very much, and they're trying to grab yield wherever they can. But it was this was a curious call sale. I have a feeling they're closing, but the strange thing is there was about 20,000 of the Jan 7 puts, the Jan 2018 7 puts trade. It has all kinds of weird smell to me, and I'm not quite sure what to make of it. But anyway, it's an awful lot of short deltas in SIRI that really didn't make a whole lot of sense to me. I have to be honest. I think there's got to be some sort of stock positioning behind it or something. But dumping the calls to make a couple of pennies, and then they're buying somebody's buying a bunch of in the money puts in little blocks. It's all kinds of strange. So that's all I got. Maybe Ophir has something a little more interesting, but I still think it's some sort of positioning against some sort of long stock position. That's the best I can do, because I can't think of why else you want to do it.
Ophir, I know you probably were like me. Your hopes were dashed when you realized this wasn't options on the much maligned digital assistant over at Apple, because it'd be all puts all day, I know. So that said, once you got over your pain of that, what do you think about these potentially closing calls here for about a nickel over parity, if that is the case in Sirius XM?
I mean, I guess I hope they're closing. I don't know. I mean, who would open for a nickel over? I don't know. It doesn't. The trade. I mean, I hunt for yield if you want, but that's not yield. That's just risk. I mean, what is the margin on that if they're opening? I don't know. I look at the open interest. It looks like a close. It doesn't look like it doesn't even look like a negotiated trade. Actually, it looks like someone just hit the bid. I don't know. Just because they blew out maybe. I don't know. They're upset. The Jan 19.7 puts, those look like purchases to me for sure. Again, I don't know. I mean, not to sound idiotic, but obviously they're bearish. I don't know. That's an awfully big position to buy and put that far out. They're $2 in the money for a $5 stock. I kind of agree. I think both trades are bizarre, and I don't like either of them. I hope the calls were a close, because if that was an open naked, not a good trade.
Yeah, that's we said that a lot here on the Odd Block segment. Sometimes you might say to yourself, the rational side of your brain would say, what kind of person would ever do that? And then we see a lot of, I've been doing this show for many, many years now. We've seen a lot of those types of trades where you just kind of shake your head and say, okay, size money, not always the smart money. One of our mottos here on the Option Block, and certainly on the Odd Block segment. All right, let's take it home here with Uncle Mike's favorite name. Dollar Tree. I forget if it's Dollar Tree or Dollar General, Uncle Mike. One of those two, I know. You're big supporter of these guys. Who knows? Maybe these calls were you. We got Dollar Tree today. Ticker symbol DLTR, closing 77 and about 3/4 or so, up about 90 cents or a little over 1% on the day. This is the name that does about 9,000 contracts and change, so pretty active from an Odd Block standpoint, doing a little over 3x that today, doing about 27,000 and change, about almost 6.5 to 1 calls over puts. And this time we won't be leading you astray. That is what we were looking at this time. It was back to March, the straight up March 80s. So a little bit out of the money calls here, going up, starting off with a block of 14,000. Looks like straight up paper buy-in for $1.20. As the day went on, that went up in one block over there on the Philly. As the day went on, another about 4,000, nearly 5,000 actually. So another about total of nearly 19,000 on this strike, all said. So this is initially looked like they might be fitting in. It might potentially be closing because we're close to the OI, but then even that was exceeding the OI, and now we're way past only about 13,000 contracts open on the strike. So it seems like someone has, shall we say, an exuberance, perhaps an irrational exuberance, but an exuberance for the March 80 strike, and he's putting more of his money where his mouth probably already is. And let's see, looking back here at the year that has been in Dollar Tree. This has been an interesting one. It has a range all the way up to just flirting ever so close to 100. Didn't really make it, though. 7 cents off. That was back in midsummer of last year. Then kind of got its wings clipped. Went all the way back down to about $75. Then it's kind of been vacillating in this 75 to 90 range again. Right now, like it seems on the lower end of that near-term range. So if you're a big believer in near-term ranges, perhaps our friend here is. And he's kicking things off. Speaking of kicking things off, let's mix it up a little bit. Let's kick things off with our guest, Ophir. What is your take here on these? Looks like straight up, irrationally, perhaps exuberant call buying in good old Dollar Tree.
Yeah, this looks like just straight down the middle call buying. I'm looking at the intraday chart, and it looked like, while the market was tanking, the stock was rising. And it looks like these calls came in right after it hit the high of the day. They close. Yeah, they close a lot lower. Let's hope this person wasn't betting on a day and they really are looking at 2 weeks because, this looks like straight long. I don't know about that open interest. If that's, maybe this is the same guy and he's just, piling on these calls. I think this company at one point, trying to remember, this might have been a takeover candidate. I always get these guys confused with all the Family Dollar and that. But, it looks like aggressive call buying. I'm really interested to see the OI tomorrow. This is a bullish bet. I don't know how much we're going to take away from that, but this is just a bullish call buyer, it looks like to me.
Mr. Rock Lobster, anything to add to that? Does seem like someone's got a lot of love, and he's keeping the party alive here for those March 80s in Dollar Tree.
I think they are trying to keep the love alive. And Dollar Tree got kind of spanked a little bit. There have been worse call purchases. It's within the realm of possibility for this thing to rip a little bit and make some money, but it's never a good sign when you buy calls and then you're down 40 cents a contract the first day. It's never great. Speaking as one that has happened to him before, at least once or twice, before you could get a hedge off and you're really grumpy and upset. But besides that, I do think, and I don't know what the next news is for the retailers. I thought most of the big retailers come out. We've had Best Buy. Do we have Walmart still to come? I think Walmart's already come. So I would have to say, though, this is the kind of stuff you do see in a bull market where you got 2 weeks to go and you're starting to see some paper flinging, buying some retailers that have been beaten down. So I can only say that this would be probably something I wouldn't mind selling back in the old days. But as right now, just looks like a straight bullish buy. I didn't see any stock against it of any size that was close. So, it's just like Ophir said. I think it's just a straight up call buy, and as of right now, it's a not fun call buy. That's why we don't call it the pretty block. We call it the odd block.
Yep, it's not the beautiful, sexy, uber profitable trades. It's the what the heck are they up to block, a.k.a. the odd block. And now speaking of what the heck is he up to, because he's been quiet for a little while, it's Thursday. That means it's strategery time. It's time for Uncle Mike and the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block. It's Thursday. It's time for Uncle Mike to come on down from the mountaintop, stone tablet, smoking jacket in hand to dispense some options, wit, and or wisdom, whatever he's feeling like today. Uncle Mike, I got a feeling since you're all over your all-time highs these days, I have a feeling, I'm just guessing, you're going to go out on a limb and talk about maybe some profit-taking scenarios that might be apt for the given scenario. Am I completely off base, sir?
No, you're completely on base. Yesterday was a pretty big day for a lot of people who had long deltas. Going into Tuesday night, like I was saying, I added some more deltas to the position just because the accounts were a little bit short or not short deltas, but didn't have as many deltas as I would have liked. So added some deltas to it. And then yesterday, when we had the big rally with which we did, I actually wanted to reposition a lot of things. So I actually got out of everything at the end of the day. Not everything, but everything in my SPY spread strategy. And the reason for it was twofold. Number one, when you have a long call spread that goes very deep in the money, I prefer not to stay in it just because there wouldn't be any right now, but eventually you're going to run into some type of a dividend risk, meaning you could get assigned early and then get stuck paying the dividend. Once again, though, it was a 235 call, so quite frankly, if I would get assigned early, I would tell them thanks and gladly pay the dividend if they want to take on all that time value. But I just wanted to bring that up because it is something that you need to be aware of if you are trading long call spreads in stocks that have dividends. It is a real risk. In this case, it really wasn't much of one, but I did want to bring it up for purpose of education. Second reason is that I believe that you need to have some type of a number in mind to where no matter what's happening, no matter what's going on, if you either make enough money or lose enough money in a day, you need to just say, I need to take a step back and just kind of look at this again because of the fact that when doing this, if you are just blindly believing that the market's going to continue to go your way now, all the time, and forever, you're grossly mistaken, as everyone would know. But I want to emphasize that even though I'm still a long-term bull, I didn't really change much after yesterday, I did want to get out and take some profits because of the fact that I wanted to reposition myself, but also I wanted to be able to have everything in cash just because let's say that early this morning, everyone comes out and says, April Fools, Donald Trump's not presidential. The speech really wasn't that good. And then the market goes back down 35 points. You want to at least have something to show for it. Now, I know there's always the possibility that we could have gapped up overnight and I would have missed some of that. Believe me, I've had that happen before. But the reality of it is that when looking at the actual dollar amounts that were increased in my family's account as well as a lot of client accounts, it was prudent to take something off the table, and that's why I did it. Now, granted, today I got right back in. I mean, I repositioned everything. I don't have quite as many deltas as I had a couple days ago, but I want to point out that repositioning, taking profits, it's not going against your trading rules. It's called being prudent. I was planning on this rally going much slower than this. I figured we'd be at these numbers in another few weeks, and that's how I was trading it. But we got there much sooner. So with that, I didn't quite get the full profit that I would have liked because I had longer-term options in some cases, but I still had a nice profit over the course of one day. And that's why I got out of a lot of things and repositioned everything. So with that, I want to emphasize in the strategy block for today, make sure that if you do have a big day, there's nothing wrong with getting out, even if it is a little bit early, because you can always get back in. And that is the strategy block for today.
Speaking of getting out, we're going to get on out of the strategy block and see if we can squeeze in a couple of your questions with a real quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's see how our Snap poll has evolved in the past few minutes. It's still 48% buying the 1 month 24 put, only 8% loving the calls. So you guys who said the calls were going to get it with our audience. Not so much. Maybe I told you, our audience, very, very bright folks. 20% say stay the heck out of there. They don't want to touch it. And about a quarter going to the dark side with Ophir and maybe even myself. We'll see. We're saying they'd rather sell some premium just for the fun. It's so tasty. All right, so we'll see how that evolves. We got a few hours left on that one. Just a fun little thing we threw up there as the show was going. As for our official question of the week, we asked you guys kind of themed at the beginning of the week because of all that Oscars brouhaha. We asked you, hey, Warren Beatty screwed up the best picture. So what's your biggest option screw up? And if you have others, send them in. We gave you 4 choices. We say you held on to your shorts too long, or your time decay killed you, your gamma exploded in your face. I like that one. And Vega snuck up on your deltas. So far, I won't make over a guess because we're running low on time. It's a tie right now. 37% each saying I held on to my shorts too long, and 37% saying my time decay killed me. 15% saying your Vegas just crept up ever so sneakily on your deltas. Only 11% for the gamma explosions. That one's a little esoteric, but also quite fun if you can sink your teeth into that one. Also, a few of you writing in with some interesting versions of your own big option screw-ups. Let's see. John Dakota says his one mistake was putting on an iron butterfly on wrong. So I guess putting it on the wrong way than he intended. He had to lose 20 handles and a DT. I'm not sure what DT is for that. Maybe he had a delirium tremor as a result. I don't know. And he just took off BlackBerry for 200. I'm sorry, Best Buy for 200 plus. So, that one looks all right. I don't know if I'll call that one an error. So well done on the latter one, even though not much of an error. Ophir, if you have anything you want to chime in there really quickly, what if you had to pick one of those 4, holding on to your shorts too long, your time decay kind of working against you, a gamma just exploding in your face, or Vegas creeping up on your deltas, which would you say is your biggest option screw up? Or maybe do you have a 5th option you want to throw in there?
Yeah, I embarrassingly have a 5th. In my allergy to owning premium, that's just a gigantic mistake I made. I was trying to get long deltas, so I bought calls. I did a risk reversal. I sold puts, and the stock dipped in my face. Later jumped 60%, but I maxed out my margins early in my early days. I maxed out my margin, had to cover everything, took a huge loss in a stock that did end up going up 60%. So getting too allergic to premiums, doing my risk reversal, selling puts and buying calls, just not good trading. Hopefully I've learned my lesson in the years, but you can believe in a trade, but don't bet the whole house on a trade. That's just not how to trade.
Yeah, that's it.
Some kind of risk management.
Obviously, we're limited in what we can put in a Twitter poll. We only have 4 choices, but maybe maxing out margin or committing too much capital to a trade could have been an interesting one to put in there. There's so many choices to put in there. I don't know, Uncle Mike or Mr. Rocklops, do you have any other additions you'd like to see us add to future polls here, or are you content with our 4?
Well, the only other one that I can add is fat fingering an order, and I don't want to get into that. That was not a fun day.
Remind me to tell you over drinks one day how I moved the Dow by accident as a clerk. That was fun. Mr. Rocklops, anything to add here?
You know what? I was talking into my screen again. I was just closing a short contract. You're saying holding on to shorts too long, but you have short contracts that are worthless, and you don't buy them back. And then you're sad.
Well, that's kind of what we meant by that. You sell the shorts and you're kind of holding on to that short position.
Yeah.
And I guess you can read that a couple of different ways, but that was the intent. People who are, blasting away at these options for 25, 30 cents, and it gets down to 6 cents and they refuse to buy it back, and they let it go and they wait, gets down to a penny. They still say no, and then it explodes to $5. That's what we're talking about there.
I got that. Then that would work. That's a good one.
I'm surprised that isn't number 1 with a bullet for our audience, just given the amount of feedback we've had and people writing in with tales of woe on that exact subject. I would thought that would be number 1 with a bullet. The fact that it's tied with time decay. I had no idea we had so many degenerate premium buyers out there in our audience. But then again, we had that other poll we did where people were talking about buying longer term options. So maybe more premium buyers lurking in our audience than I initially thought. If you have thoughts on that question, got another day or so to weigh in on our question of the week. Meanwhile, we got to keep on rolling into our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, an interesting week lurking ahead of us. We had a lot of the retailer names coming out this week. We had, of course, I believe, Target and Best Buy. Costco, I was after the bell. We didn't even get into them. Not a lot of people writing in with questions about Costco. Everyone had Snap on the brain today. So if you're one of the Costco slingers out there, I apologize. We'll get to it maybe on a future show. But Costco is popping off after the bell. Maybe I can do a quick check-in on Costco while one of these other guys is rambling on about something. But let's see. Costco, we have a little bit of numbers this week, but kind of a light week, all things considered. Snap was really the thing that a lot of people were paying attention to. Looks like Costco in the after hours closed right around 178, off nearly $7, or about nearly 4%. I'll have to look and see what they were pricing in for a straddle. Maybe while I do that, Ophir, you are our guest. You get pride of place. What are you watching for the rest of this week into the weekend, sir?
Yeah, I mean, the last 2 days have made this week actually pretty interesting. So I want to see if tomorrow's back to normal kind of quiet trading, or if we're actually now going to find ourselves in a world where, there's realized volatility back in the market. That would be amazing, because that means the VIX is coming back, and that means we got vol coming back. I'm also curious to see if the bulls are really as resilient as they seem, which they have been so far. But if we see, let's say, consecutive large drops, what if we get a 1% drop tomorrow, see if the end of the day turns into one of those free-for-all panics, don't want to hold longs over the weekend, or if it's just, calm, normal, no problem, small sell-off in the middle of a strong bull market. So tomorrow will be interesting to me. I want to see if we get a 1% move either way. The actually could mean kind of the dawning of a new day for the market. We've been in this kind of malaise for so long.
Yeah, a little bit of realized volatility would certainly be a nice thing. We've been talking a lot on our Volatility Views program about how realized vol south of 6% last couple of sessions notwithstanding, and the futures pricing in a month or two out in VIX land 15%. Something's got to give there. VIX cash hovering around 12. Something's got to give. Realized has got to pop, or those futures have to come in dramatically. Seems like perhaps if this holds course, maybe realized will pop a little bit, which would not be the worst thing for everybody at the end of the day. By the way, I looked at Costco. I think they're pricing in about $5, so they're selling off about $7 in the after hours. So one of the few names we've mentioned here in the total cycle that has actually outperformed, at least so far, first blush from an earnings straddle perspective. We'll see how that works out in the after hours. Let's turn now to you, Mr. Rock Lobster. In addition to your Costco obsession, what are you watching for the rest of the week into the weekend?
I think there's one Costco in Maine. Maybe two.
One in the whole state. LL Bean forced them all out.
Maybe two. Maybe there's one in Augusta. I'm not sure. I don't think I've been to one since I moved to Maine. I'm 100% sure I haven't. Anyway, besides that, what do we want? Will we or won't we? Will this little commodity sell-off continue? Will the financials, will the one-day breather actually be a breather, or do they continue their ride back up? Actually, they were green for quite a while today. It was just they kind of gave it up at the end of the day. Will the market be kind of hostage to whatever happens in Washington? I think it almost felt like it traded on blips of news about Russian involvement in the election and all that stuff, or the North Korean dictator, the guys having people whacked in Malaysia and launching missiles. So it's kind of the same old stuff that makes volatility happen. Just there hasn't been any, amazingly, except for the last 2 days. There hasn't been any. So just the way the action was, the way there was the whole curve feel like it got dragged down in the index products. Nobody's really setting up for any kind of a big pullback, but tomorrow something could happen and that could change everything. So at least for right now, it looks like kind of sliding in expiration.
And sliding into last here, we have Uncle Mike. What are you watching for the rest of this week into the weekend, in addition to piling all that snap into your clients' accounts, of course?
Right. 2,400, 21,000. We held 21,000 today in the Dow. Not by much, but we did hold it. I want to see if we can continue to hold that tomorrow. And then I want to see if we can break through 2,400 in the S&P. It's definitely, like I was saying earlier, a psychological number. And like to see if we can make something happen.
We, of course, need to make something happen, which is bring an end bring to a close this epic journey through the world of options. There it is. There's our music. It means we've come to the end, listeners. We had another fun sojourn. Talked Snap. We talked all things options, back testing. We talked a lot of unusual activity in a wide variety of names. Talked about your proposed options positioning out there in Snap land, as well as SIRI and Dollar Tree, and a handful of others. And, of course, your thoughts on your favorite options errors. Still got another day or so to weigh in on that one. But before we go, we check back in with my cohorts, my partners in crime. Let's start with you, Ophir. If our listeners are interested in all the stuff you were talking about over there at Capital Markets Labs and all the cool back testing and research you guys do, where should they go? What should they do?
Well, the easiest way is just go to my pinned tweet. How about that? Go on to Twitter and go to my pinned tweet, and you can just watch a nice little 4-minute movie of what the back tester is, and if it's compelling to you, give it a run, and if not, then you watch something pretty cool for 4 minutes. That easy.
There you go. I can attest. I have watched that video. It is quite a compelling 4 minutes. So head on over there. He is at Ophir Gottlieb. That's OPHIR-GOTTLIEB. For all of you who have a hard time spelling names, I feel you over there. Let's start, Uncle. Let's go to Rock Lobster. What is cooking in the land of all things option pit? This is where you speak, sir. Once again, you're talking to your screen. What is wrong with you over there? What are you doing? Are you still crying over your ice rink?
You know what I was doing? I was trying to Google if there's a Costco in Maine, and I don't think there is.
I already put that pressing question out to Twitter, so we'll see what they have to say.
I think the closest one is anyway. We have a butterfly class on Saturday. A short-term flies, mid-term flies, out-of-the-money flies. If you want to put on a fly, and actually put it on where you think you have a shot to make some money, you have to know how they work. And we will teach you how they work.
There you go. They'll teach you how it works. Optionpit.com to learn more. All kinds of flies. Iron, other. Check it out. Optionpit.com to learn more. And last but not least, he's so busy, he doesn't want to take your call, but he'll entertain the notion anyway. He's Uncle Mike. What's cooking in the realm of Uncle Mike, sir?
Well, a couple things. First off, I was planning on going to Costco tonight. We do have a Costco in St. Charles. But after I'm done with that, I do want to announce to the world that my backlog has been taken care of, and we are open for business. So if you are looking for a financial advisor who is not afraid of the word put option, or if you are a trader yourself and feel you would like to save money on commissions and pay 35 cents per contract, no ticket charge at TD Ameritrade under our umbrella, or possibly Interactive Brokers at 25 cents a contract plus an exchange fee, feel free to contact me. Of course, we would have a small fee, but we do make it worth your while if you're a frequent enough trader. 312-212-3531, or feel free to send me an email at mtosaw@rcmfs.com.
There you go. I would tweet that out for you, sir, but you don't tweet, so we can't say that Uncle Mike is back in business. Unless we do like the RCM alts or something. We can maybe do that. But no, you got to get the M Tosaw rocking, sir.
I do. I got to step into the 19th century.
In the meantime, listeners, hit him up, mtosaw@rcmfs.com. On behalf of Uncle Mike and the Rock Lobster and our guest Ophir, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And, of course, for all of you who join us live, we'd love to see you guys, too. Hope to see you next week live Monday and Thursday, every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixler. And we'll, of course, see you next week for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.